and I want to welcome you to our webinar today on creating and comparing multiple plans in RightCapital. As we know, there's a multitude of different paths a client might be taking across their lifetime. And so today we're going to be looking at how we can leverage RightCapital to really have that fine-tuned approach to be in line with illustrating how those different paths are going to play out for a client's plan and also those different strategies that we are looking to propose. So today we are going to be walking through customizing proposed strategies. We're going to be looking at some common what-if scenarios. And this is also intended to be an interactive webinar. So if you have any suggestions of what you might be wanting to see, we can certainly take those into considerations. I'll be taking a couple suggestions, but today we're going to be looking at things like changing asset allocation, looking at that very common idea of can I retire early, looking at downsizing, and a couple other items as well. So feel free to use the questions drop down to type out your suggestions there, but we're also going to be covering the different resources that you do have available in RightCapital. One of those other resources being that during this webinar, if you have questions, you also can use the questions drop down to type out your questions there. More than happy to take any questions towards the end, and also happy to take suggestions regarding some common scenarios that you might be modeling yourself. And so switching gears into RightCapital, today we're going to be looking at the Swan and Turner family. But before we look at diving into their proposed strategies, we first need to understand what is happening with the current plan for this family. So starting in the profile blueprint section, here in the net worth, where we can just easily see what is happening with the current path, we can see that the Swan and Turner family is in their early 50s. They do have a child, and they have a current net worth of $1.86 million, including their primary home. And they also have a mortgage still outstanding on their home, but they have a good starting net worth. As for goals, they do have a vacation goal occurring this year into next year, and then we have their child attending college within the next 4 years, and then we have them retiring at age 67 respectively as well. For their current income, savings, and expenses, we have some nice income coming in and some good savings as well. And then of course, with that, also some good expenditure for their current living expenses. But as we know, there's a lot of different paths a client may be taking, and that's when we navigate to our retirement module. So under retirement and in analysis, this is where we're going to see that first gauge of financial well-being, which is the probability of success. The probability of success is looking at those Monte Carlo simulations, and it's the 1,000 trials of market volatility, and it's the percentage of those trials that make it to the end of plan without running out of money. So probably one of the first questions we get is, with my current path at least, do I make it to the end of plan without running out of assets? So in this situation, they have an 87% probability of success with their current path that we have indicated. But that is where our proposed strategies come into play. To start to illustrate our proposed strategy, that is when we leverage the action items. Here in the action items, this is where we go to illustrate changes to our proposed strategy. Anything that we are doing here today in the action items is only ever going to impact our proposed strategies. This is not going to impact the current plan. So if we were just looking to test things out, you can do so here, and you can always hit the reset button if needed, and it will not impact the current path. To modify the current plan, that's when you navigate back into the profile section and make changes there. But to start today's conversation, we want to start to illustrate and bake out a little bit of a proposed strategy here to compare against. So with their current probability success of 87%, we have a couple things that we're looking to modify, very common what-if scenarios, such as the idea of first looking at the idea of saving more and also reallocating our investments as well. So we're not going to be touching necessarily their expenses yet, but we do want to illustrate them saving more and reallocating the portfolio. So under strategies, the first thing that we're going to see here is actually the asset allocation drop down. So right now we're using the current allocation, which we entered back in the profile net worth for their investments for their portfolio. But to start to illustrate a different strategy here, we're going to use this drop down and we're going to select our desired portfolio allocation. So in this case, we're going to be looking at a growth portfolio, for example. And once we hit refresh, we're going to see how that's going to start to impact their probability success. So now we've already raised the probability success a couple points, which is great, but there are those other things that we want to manipulate as well. So we're going to see here in the action items, when we first open up the retirement analysis section, a couple action items are pre-populated here for us to start to carve out our proposed strategy. If we're looking to incorporate more that we know is going on in the current plan, that is when we click on the edit button. The edit button is going to open up a drawer in which we can choose to add or remove action items. So for example, we do want to incorporate a couple other savings that they're making, such as the other 401k for Elizabeth. We can also incorporate the income and any of these other items that might be important for their proposed strategy. These are all entered as part of the current plan, so they're still occurring. It's just whether or not we want to incorporate these in the action items to propose changes to. So once we check those off and hit save, we're now going to see those items pulled into the action items as something that we can now propose a change to. So in this situation, we want to propose that Will also maxes out his 401k. So we can just use that slider to indicate so. Once we hit refresh, we're going to see how that's going to impact that probability success once again. But there is another type of savings that we're also looking at doing as well. And this is going to be a new path that we're looking to illustrate for the Turner Swan family. To do so, we're going to click on the edit button, which is going to open up that drawer once again. And here's where we're going to see that list of existing action items, but we'll see at the very bottom of this screen an add new items button. When we click on add new items, this allows for us to propose a new path altogether for the client's proposed strategy, such as new goals, new income, new savings, new expenses, and we can also propose them purchasing different kinds of insurance policies and the impacts there, and also proposing an annuity purchase as well. But as I said, for this situation and for this proposed strategy, we want to illustrate them saving into a different type of account. So in this situation, we're going to be looking at the idea of starting to bolster that taxable brokerage. In this client case, they're more comfortable and a little bit more used to that, as this is something they used to do. So we're going to be proposing that they continue to do so in the future. So we're going to click on the add new items taxable savings card. From here, we can enter, similar to what we would have entered in the actual profile section, the contribution amount we're looking to capture. So let's say it's just going to be $10,000 a year. We can also change the owner, whether it's client, co-client, or jointly owned. We also can change our target approach if we're trying to aim for a salary. In this case, it's just a specific dollar amount. So we're going to leave that as is. And we can indicate when this is going to start. Let's say it's going to be calendar year 2024. And we also want to just have this happen for a couple of years. And we can hit save. And you'll see as we're starting to build out our proposed strategy that some of the different items that we have indicated that are different from our proposed to current plan are going to be outlined in the blue text. When we propose a new path altogether, I want to note that you're going to see that that is in a darker beige background. So that's indicating to us that this is a new path specific to proposed strategy, which means it's not going to be impacting that current plan. So we're going to see this in the current plan as 0, for example. So now we started to build that out a little bit, but we also have some key events that the client is also looking at achieving. One of those very common situations of downsizing when they retire. So we're going to actually illustrate another proposed strategy. To do so, we're going to click on the pencil icon next to the current plan, which is going to open up this drawer in which we can add or remove proposed plans. And we have two options for how we wish to proceed with adding a new plan. The first one is clicking the add new plan button at the bottom. When we click this, this would essentially be copying the current plan, so that way we can build off of that and creating a new strategy. Or we can choose to copy off of one of our existing proposed plans. In this instance, we actually do want to continue to build off our proposed plan. So we're going to toggle to that one and we're going to hit the copy button. When we hit copy, that's going to then populate a new proposed strategy that we can click into to retitle. So in this case, we want to make it easy for us when we're looking at the drop downs. So this is going to be our retire sooner strategy plus downsizing. And we're going to hit the check mark to save the name change. And then we're going to hit OK. Once we hit OK, because we just added a new proposed path, we're going to see the ability to change the plans that we're selecting. So now from the left-hand side, we're going to be switching to the retire sooner and downsizing plan. When we toggle to this one, we're now going to see that populate in the action items for us to be able to propose changes to. And because we have multiple strategies available now, we can also change which plan we're looking to compare against. So in this instance, I'm just going to switch over to proposed plan for reference. But in the action items, we're going to see that the retire sooner and downsizing plan is the same as the proposed strategy. But that's because we haven't made any changes between the two strategies that we just copied off of. So to start to make those changes, we are going to be illustrating that key event that a lot of people are aiming for, which is retiring sooner for both Elizabeth and Will. So we can start to modify these action items by clicking into the field and typing out the age at which we want to retire at, or we can use the slider to indicate that age as well. So let's start to fine tune that retirement age. We can hit refresh just to see how that's going to impact the plan without adding anything new. And so in this situation, it's going to drop the probability of success a little bit, but we also have that idea that we are looking at downsizing when we retire. So let's start to add that by going down into the action items, clicking on the edit button. From here to propose that new path, we're going to click on the add new items button. We're going to go to goals, and this is going to be found under the property section, and it's going to be a primary home relocation. So this is where we can go to illustrate them purchasing that new property. They're looking at downsizing. And when we're purchasing a new home, we can indicate if we're actually buying a new home, inheriting one, renting out a home, or moving into an existing property. In this case, they're purchasing, so we're going to leave that as is. And then a very important designation here is going to be the location of this home. As if we move to a different state, we're going to illustrate them also moving their tax situation for state tax calculation purposes. So let's say in this case, they're going to be moving down to Florida. So we're going to select Florida. That's definitely going to have an impact to taxation there. So it's an important designation. And then we want to make sure we're toggling when we want this to occur. So in this instance, we can choose a calendar year, their retirement year, or end of plan, or never. In this case, we're going to select Elizabeth's retirement. And then we're going to enter those other important property fields, such as annual insurance, maintenance. And since we are purchasing a new property, we can also indicate how we're going to be paying for this property. So we're going to see a down payment field here. If they're paying for this cost 100% upfront when it occurs, we can leave the down payment as is 100%. But if they actually plan on financing this, we can then enter what that mortgage down payment would be, the total term, and the interest rate. And then at the bottom, we can indicate what is going to be happening with the existing primary home, whether we want this to be converted to a vacation home, converted to a rental home where we can see some of that passive income stream coming in, or if we want to sell the property. That's going to be the case for this clientele, and they're going to follow that common path of reinvesting the proceeds into their taxable account. So we're going to keep that selected and we're going to hit save. And another thing to note, when we have the sale of an asset, RightCapital is automatically going to be saving those proceeds and reinvesting them. So we don't have to necessarily add anything with this particular entry. It's going to do that for us. So now we have that idea here that they're retiring sooner and they're downsizing. But we have another path that we're looking to follow as well. So we're going to create another proposed strategy. So we're going to click on the pencil icon once again. And from here, we're going to be greeted with that two different options that we talked about earlier. The first one is adding a new plan entirely, which is essentially going to be copying that current plan. Or we can continue to build off of one of our proposed strategies. So we're actually going to be continuing to build off of this retire sooner and downsizing strategy. So we're going to hit the copy button and we're going to start to reallocate. And so from here, we're going to retitle this particular proposed strategy. This is still going to be retire sooner. And we're going to look at them not downsizing to see how that's going to impact their plan. So we're going to hit the check mark to save the name change. We're going to hit OK. And now the important thing is making sure we're toggling the left-hand side to the retire sooner plan. And that is because when we toggle to that particular plan, that's going to be the one that we are modifying when we're down in the action items. And here I want to toggle to retire sooner and downsizing just to show that comparison as well. So in the action items, as we can tell when we have that retire sooner and downsizing, with that situation, if they follow the exact parameters we had indicated, they have a 97% probability success, which is not necessarily a bad probability success, but if we're looking at a different path, such as not downsizing and moving to Florida, which is a pretty big shift, we're trying to illustrate all the different paths out there. That's what we're going to be doing with this retire sooner plan. So in this particular one, we are going to make modifications to this existing proposed strategy of not doing the primary home relocation. So we can modify this for this plan by using this drop down to change the timing of this relocation to never. We also want to look at them saving a little bit more. So we're going to change this joint taxable account. And I also see a fantastic suggestion of looking at the idea of being a little bit more tax efficient with our saving strategy, which is a great suggestion. So we're going to look at proposing that, but I'm going to hit the refresh button real quick by clicking on the edit button, add new items. And then from here, we're going to click to add savings. And then we're going to be looking at saving into a Roth IRA. From here, we can then indicate how much we're going to be contributing to the Roth IRA, whether it's an annual dollar amount or whether we want to just illustrate the max contribution. We can make that adjustment from here. And then we can indicate the owner, whether it's client or co-client. And then we can also indicate when this is going to end as well. So let's assume that this does start this year. So we're going to make that change and hit save and then see how that impacts the plan. And then we also want to illustrate another suggestion, it looks like. Awesome. So this is a great suggestion. So somebody mentioned that a very common situation that they have is a client switching career paths. So it's a great suggestion. There's definitely a lot of nuances that get changed when somebody switches career paths. So let's actually build out a fourth scenario to build from here, just to have it be a little bit more isolated. So let's copy the downsizing one. Let's title this switching careers and then hitting the OK button. And then from here, we want to make sure we toggle to the switching careers path. So that way we can modify that particular proposed strategy. So when we have somebody switching careers, a lot changes. Things like their 401k elections, their salary, of course, is going to be changing, hopefully for the better, but it certainly depends on the circumstances. So let's say in this instance, Will is going to be switching careers. So the first thing we want to be doing is we can either continue to leverage this salary card, unless we're going to be illustrating him continuing to work for this salary, and then we're going to be showing him switching gears. But let's assume that we're just going to be maintaining this and we're going to be having the salary be assumed to be starting this year until he retires. So in this instance, let's have him take that higher paying job that they're looking at. We can indicate that in this field. And let's say the 401k elections are also going to be changing, especially when it comes to employer matching. So it's actually when we're going to be wanting to zero out this 401k card. And we can also do the same thing for the Roth IRA if that's relevant as well. But we're going to hit the refresh button, and then we're going to propose that he saves into a new Roth 401k. So we're going to click on the edit button. From here, we're going to look at add new items. We're going to go to savings. Then we're going to go to 401k and then traditional 401k. And I want to note too, if somebody's switching careers and maybe is going to become a teacher, anything like that, we can just use the 403b or other types of cards that might be relevant, but we're going to be assuming that this is just a standard, maybe corporate job that he's switching careers in. But we can also title this his new career. So let's say he's in sales. Just so that way for our ease, when we're looking at the action items, we know that this is Will's sales career. And we can also enter that contribution, but let's assume that he makes the maximum contribution. We also want to make sure we're specifying the correct owner. And we can also indicate when we want this to start. So we're going to be assuming this is happening and is starting this year, showing that immediate shift. And this is going to be ending at Will's retirement. So we want to make sure we specify that. And we also want to make sure we're modifying what is happening with the employer matching situation. So let's say in this instance, his employer is following a different path. They're going to be matching dollar for dollar up to 6%. That's when we indicate primary match as 100% or dollar for dollar, and primary match 2 as 6%. And let's say one of the incentives of this particular career path is that he also has a nice employer contribution irrespective of what he contributes. That's when we can leverage the flat dollar match or flat percent match. But let's say his employer is matching $5,000 into the 401k, irrespective of what he contributes. That is when we can then click on that option, enter those details. And if they are going to be matching any percentage of that into a Roth account, we can also enter that here. And then we can hit save. Perfect. And so we're now going to see that impact this particular proposed strategy. And so when we propose those changes, that's going to be saved to this particular plan. So it's a great question somebody asked that I want to address while we're in the midst of making modifications to things, that when you make a modification and you hit the refresh button at the bottom of the page, that is going to be saving that item for that particular proposed strategy. So if we exit out of the module and we come back in or we log out, whatever we had indicated, as long as we hit the refresh button, is going to be saved as part of that proposed strategy. So it's a really great question when we are making those changes and we're switching between the different proposed strategies. Whatever we're saving and making modifications to, that is going to be saved and essentially stored until you come back in and mention otherwise. But now that we started to make changes to some of these proposed strategies, now is going to be the time where we are starting to illustrate differences between all of these different strategies we've already indicated. So looking at the idea of those different illustrations, that is when some of our powerful graphics are going to come into play. So from these two fields, we're going to see the probability success in that comparison, whether it's the switching careers and whatever we have selected here on the right-hand side. Let's say we want to just compare against the current plan in this situation. We're going to use this drop down right here to look at the current plan and compare against our proposed strategy of switching careers that we just modified to the current plan. So we're going to see that first side-by-side comparison here of probability success for switching careers and the probability success for the current plan of a 98 to 87% probability success. This is one of those first gauges of financial well-being, like I said. We do have other powerful visualizations that go to assist in the conversation in regards to what is happening between our proposed plan versus the current path. And that's also going to be found under the aptly named comparisons tab. So under the comparisons tab is where we're going to see a different kind of projection. And this is going to be pulling from our cash flows. We're going to be diving into the cash flows in a second to compare and contrast there as well. But just to know, the cash flows is going to be looking at that straight line projection, which is a different calculation than what we're looking at in the probability tab. So for comparisons, we're going to see here what is the difference between our invested assets between our switching careers path versus the current path. We also can use this drop down to toggle between the difference of net worth between the two selected plans, taxes, and especially as we're looking at different tax efficient strategies, we can see what's the difference between those taxes paid over time and also the assets at retirement as well. So these are going to be some key presentation visuals to show that illustration of what is happening between the two plans. We can always toggle back to the probability tab to compare against different ones if desired. So maybe we're just looking at the difference of our proposed plan versus switching careers. We can toggle that current plan to proposed and then go back to comparisons to see that side-by-side comparison of a different strategy that's a little bit more in line with what we have for our different proposals. And we can once again see that difference of net worth, taxes paid, and also the assets at retirement as well. So those are some of the key comparison visualizations, but I also want to walk through the cash flows where we can also see some key insights, especially if we're looking to really isolate the impacts of what we have indicated. So if we go into the cash flows, here we're going to be greeted with our MAPS visualization. The MAPS visualization is going to be targeting a specific year of the cash flows and putting it into an easy to understand visualization here, where we can just connect that dot of where our money is coming from with this year and what it's going to be funding for this year. So especially when we're looking at one of our proposed strategies where we are selling that primary home, reinvesting the proceeds, buying a new home, that might be an important year where we might be looking at digesting what is happening that year with our cash inflows and cash outflows. That's when the MAPS visualization can be one of those spaces to see what is happening. But it's important to note, especially as we're looking at multiple proposed strategies today, that the cash flows can be seen at all different plan levels. So we're going to notice this drop down right here that we can click into, where we can select which plan's cash flows we want to illustrate or focus on right now. So in this situation, we do want to look at the retire sooner and downsizing, for example, and target that specific year's cash flows. And that's going to be reflected across all these different subtabs as well. But just to start with the waterfall visualization, we can use a slider right here to toggle to a different year's cash flow, such as when they retire, that big life event, which is going to be isolated for us. We can see that visual inflow, and we can also see what is happening towards the end in terms of their outflows and what is being saved as well. So it's a nice reinvestment happening right there. We also can view the same information in a different visual format via the breakdown option. So this is going to be showing us that sale of real estate, what's happening with expenses, and at the end of the year, what's being saved. But this is the visualization of cash flows. Here under the summary tab, this is where we can go to see the year by year breakdown, which is going to be a little bit more of that typical classic balance sheet formatting of the same information. So here in summary, we can really drill down across their lifespan, what is happening in the cash flows. So if we scroll a little bit further down, if we're trying to isolate what is happening that year that they retire, what's happening with income sources, the reinvestment of proceeds at the end of the year, and what's happening with the inflows, we can click into each of the column headers to really drill down into those inflows or expenses for further insights and just see what is happening there in terms of the mortgage down payment by simply clicking into each of the column headers. And we can also view what is happening in the accounts tab in terms of ending balance by accounts per year. But this is also where we can go to see additions to accounts, RMDs, withdrawals from accounts, and net cash flows as well. So if we're looking to see those savings contributions going towards accounts, the reinvestment of the proceeds, we can view all of that here in the net cash flows. We can also see them pulling from their taxable bucket to fund their negative net flows, which we saw happening back in the summary tab, just for reference as well. So a lot of key insights can be found here. We can also toggle back to the current plan if we're trying to isolate that. But I want to highlight before we dive into questions, because see we've got a plethora, how we can incorporate all of this information into PDF reports. So if we go to the gear icon in the upper right hand corner and in the report section, this is where we can go to check off which modules we want to include in the PDF report. So in this instance, we're going to be checking off analysis and cash flows in the blueprint because that's what we covered today. But when we are curating a PDF report and we're looking to incorporate multiple plans in that report, we can do so by clicking first into the analysis underlined header right here. It's going to open up a drawer that allows for us to be more intentional in which visuals are included in the PDF report. So here we can check off exactly what we want to have included. Maybe we're just looking at savings for the current year and then the probability and action items for that comparison. But the main thing here is making sure that we are activating the toggle to select plans. From here, we can choose to either incorporate all of our proposed strategies and the current plan's probability, success, and action items in this report, or we can choose to just include a couple as desired. So it's completely customizable here as well. And we can do the same thing for the cash flows. So if we click on the underlined header right here for cash flows, it's once again going to open up a drawer that gives us more functionality. So let's say we just want to isolate these couple items, we can just do so by selecting and deselecting what we want to include. But once again, for the cash flows, you also can toggle multiple plans to be included in the PDF report. So if you are looking to do a comparison of cash flow level projections and those details with your proposed strategy in the current plan or all of them, you can make that selection from here as well. And the same thing for Blueprint. This is just focusing on the current plan, but if you have a specific visual you want to incorporate, you certainly can reorder that or select that at the individual level for those sub tabs. That's how we can start to customize that PDF report, and then we can download the selected pages to download that PDF report.